Welcome to the Daily Update, where I'll go over the action in the market for Thursday, July 24th, and we'll see how things look for Friday, July 25th. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. Okay, had an update, but gave up a lot of the gains. Saw some late day selling, not a lot of conviction. Set another new all-time high though. And even though the semiconductors were up, they're underperforming. Just keeping an eye on that. That's a big growth versus value type of thing. And when the semis are really outperforming tech, which are both growth, that tends to be more positive for the market. But we had some pretty big AI news that came out, and you would think the market would have done better than it really did. We are still extreme as far as sentiment. We're looking overextended, tired. It's the middle of summer. We're actually above average with volume again. And it's like, okay, is the market just kind of hanging out here until it's getting ready to have more of a decline? We're still positive, but seeing a few cracks under the surface, especially as we look across the broad market. Okay, so right at the open, we did have a higher open. Futures were fairly strong, but then we chopped after the open. We chopped higher. We kind of worked our way up. We got above R1 at 63.74, and then we chopped above and below R1 for a while. Then prices continued to chop above and below R1, and then we saw some late day selling that gave back most of the intraday gains that we saw. We ended up being virtually unchanged, but up 0.07% on above average volume. We are still positive on all time frames, but looking a little vulnerable, but a good solid update could take care of that. We looked pretty good after Wednesday. That was a pretty solid day and shifted all of our primary indicators back to positive, but now we're seeing more of a mixed picture as we look across the different indicators here. So some comments. The S&P, NASDAQ 100, that's included this time, but we're still dealing with some overhead resistance with the NASDAQ 100. I'll show you that chart later. And the NASDAQ itself set new all-time highs. Of course, you have an all-time high, you get any kind of an upward day, and that's going to be another new all-time high. And President Trump signed a bunch of executive orders to support the export of American AI technology and the build out of the data center infrastructure that's needed. Yeah, this has been kind of coming along, and there's been things coming out about this along the way, but this is kind of a big deal. And you would think that tech and the mega caps and the companies that are really capitalizing on AI would see some real strength out of this, but it really didn't happen. Okay, semis yet again, small caps and mid caps, they underperformed, but the mega caps had a fairly good day. It wasn't a negative day by any means, but we're seeing a little bit more of that shifting going on that I've been talking about here that I'll go through when we see the charts. We're still looking good in the short term with the momentum. We have the Stochk RSI, Williams percent R, CCI 14, and 20. These are the charts that are usually on here when we're looking positive and showing good positive momentum in the short term. Stochastics, they seem to always be on the list these days. We're still looking extreme there. We are improving a little bit with the momentum, but we're still negative with the slope oscillator, but it's giving us an extreme positive reading. We're far away from the 20-period moving average, and we're looking extreme with the short-term RSI based on 9 periods. Intermediate term, we still have the CMB composite. We're still up in the +3 channel with the standard deviations chart. Momentum oscillators, as I said, are improving. We'll see a little bit of a mixed picture there when we get to that chart, but they're giving us extreme readings. The Sean trend meter did go up. It's getting very extreme right now, and the boom indicator has us being too far away on an oscillator type basis from the 50-period moving average, and then the intermediate term RSI is also looking extreme, and we're still looking pretty extreme with the 150-period simple moving average. No change to the overall Fed. There's the bickering going back and forth and all the things that are going on there, but as far as the Fed stance, there really hasn't been any change there. The dollar is continuing its decline and interest rates were up. Now we're getting closer again to the 4.5% level. We're at 4.41% with the 10-year yield, and we just ticked up a couple of notches there. And we're still extreme. We're right at 75, even though we ticked down a notch as far as sentiment. We are positive with the trend. We're above the moving average. We're above 20. And with the slight update, the bias is positive and the momentum continues to be positive. All right, some economic reports. We did get new home sales. They were up 0.6% on a month-over-month basis. That's 727,000 on an annual basis. That's less than the 650,000 that was expected, but up from the 623,000 that we saw last time. So a little bit of an improvement there, but still below expectations. On a year-over-year basis, though, new home sales are down 6.6%. Initial jobless claims. This is what's really kind of keeping things going right now as far as the employment situation. We're seeing initial jobless claims continue to drop. They expected 225,000. It came in at 217,000. And we're still up there. We're below 2 million with the continuing claims, but that's not really going up, but it's still staying at a higher level than where we've been at recently. And the S&P Global U.S. Manufacturing PMI came in under 50. Last time it was above 50 at 52.9. Now we're at 49.5. Below 50 shows slight contraction. But where we saw some strength is in the services PMI on the global here. And it's at 55.2, quite stronger than the 52.9 that we saw last time there. Okay, so here are the weekly jobless claims, which continue to go down, and that's just showing that the employment situation is holding together. We're leveling off here, but still at a higher level. We had been range bound with the continuing claims for quite a while, and then we broke to the upside, and we've just kind of stayed right in this overall range here. So we put that on the chart with the red line, which are initial claims, the blue line continuing claims, and then the latest unemployment reading, just to kind of give it a little bit more context here. New home sales ticked up just a little bit on the annual seasonal adjusted basis there. The 3-month average of home prices, that keeps going up. And that's really what it's putting some pressure on. You have home prices going up, interest rates that are higher, and that's making it really difficult for a lot of people to buy a house. Okay, all right. Now we have some estimates are exceedingly optimistic. We get this chart every once in a while from Real Investment Advice where they're looking out into the future, and this justifies stock prices going up, but are they a little too optimistic with their overall reading looking out going forward here? The market tends to trade off this, what they anticipate will be happening in the future, and as long as these lines continue to go up, that tends to be more positive for the market. And 12 all-time highs. Just not too long ago, we had 3, and then we finally have set a series of all-time highs here with the S&P, but we're up to 12 now in 2025. And then the forward-looking PE here, when you take the aggregate index here, we're at 22. That's expensive. We're over that 20 level, but the equal weight here, we're still between that 15 and 20 level, coming in at 17. And this just means that the bigger stocks continue to be overvalued, something that we've been seeing now for years. Okay, then looking at some positioning here where the momentum, that's the light blue line here, is really slowing down here, but then the risk appetite is dropping a little bit, but still looking pretty healthy for this. And then the market internal pricing of economic growth, are we getting a little out of hand here? The cyclicals, those go with the economy, and they've been outperforming defensives. That's the dark blue line here. But then you look at the consensus fourth quarter for real U.S. GDP growth actually coming down a little bit. Okay, a little bit of a disconnect between the two here. And then global equities are rising much faster than earnings. Okay, but the market doesn't seem to care about that, at least right now. And then profit margins, they continue to go up, but we're not at an all-time high yet with this reading, according to JP Morgan. And then quarterly earnings per share expectations continue to go up, and this justifies prices going up as well. Then frequency of earnings surprises. Most companies that have been reporting so far are surprising to the upside, and that's giving the market some support there. When they miss, they're actually down here, but the the surprises to the upside are much higher than the surprises to the downside. Okay, materials. This is an area that we watch kind of off and on. It's one of the sectors of the S&P 500 is improving here. We're seeing a little bit of improvement as we've been coming up along with everything else so far in 2025 after the April lows. And then we switch over a little bit here, the financial conditions. Now, I show a version of this chart in the weekend video where I don't plot the red line here, which are first, this is the Fed funds rate here, where we're actually coming down. When we get a little bit concerned is when this black or blue line here continues to go up. And that's when we tend to see things running into some problems. And this is continuing to go down. All right, and then this is kind of a funkadelic chart here. Recent trade deals mean that much of the U.S. trade deficit is now covered by agreements. All right. It's true that lots of smaller deals remain to be negotiated, but as the gray area in the chart shows, those really aren't economically meaningful. In effect, the trade war is over. So here, Robin J. Brooks has now declared that the trade war is over and the agreements are covering much of the deficit, which is really what the goal was in doing all of this. And then U.S. oil production continues to drop down as well. Now, that's what's keeping oil prices high. Now, a few weeks ago, we did have OPEC Plus come out and say, we're going to increase the amount of oil we're producing. And oil didn't really drop. That's usually what happens. This is more of, since this is going down, that means that there's less on the market, and that tends to push oil prices up as the amount of oil being produced is going down. Okay, then big moves. Now, even though we've been kind of lazy here with the indexes, we're seeing a lot of stocks that are really moving around quite a bit. Big moves in individual stocks are happening at a historically high rate. This is the Russell 3000. It's a broad market measure here. The percentage of stocks that have moved more than 20% in a single day over the last, and there's roughly 252 trading days in a year. And it is going up here as well, just showing that there are some big moves in companies. And then this is looking also at cyclicals, which tend to do better when the economy is doing better. And then defensive, this is what the market gets into when we're getting ready to go down and the economy is looking weaker. Okay, cyclical sector breadth has weakened relative to defensive. Now, it's still been going up here, but when we look at the breadth, we're seeing a negative divergence here. And I've been picking that out in some of the charts that I've been seeing, and we're not seeing it be really habitual yet. It's just we're seeing some things under the surface that suggest maybe the market is becoming more defensive as we get ready to go into August and then into September. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. Okay, here is the chart, higher open, and then we just chop, chop, chop. We finally made it above R1. And then we chopped below R1, back above R1, and we just kind of chopped along sideways. This is where we gave up most of the gains going into the close, and that's not a real positive thing when that happens. We would have had a more solid up day here, but this late day sell-off is not really all that positive. And we are up, though, in the initial overnight session here. We're seeing the futures bouncing up fairly well there. And we are seeing the blue line back above the red line with the intraday growth versus value chart. So that's, even though they both declined near the end of the day and the red line came down, we like it better when the blue line is above the red line. And seeing still a little bit more of a bounce here after a big move down with the S&P growth to value ratio. So when we look at the end of day charts, growth was up where value was down. So growth had a fairly good day. It was up less for the mid caps and and it was down less than for the mid caps, and it was down a little bit less here for the small caps. So we're just kind of chopping along sideways with our small cap growth to value ratio. A little bit of an improvement here, still looking fairly positive with mid cap growth to value, and breaking out to a new high with S&P growth to value. So that's positive right there. And we ticked back up after we saw a bit of a decline with this growth to value ratio. And we came down a little bit, but still looking good, okay, in the overall reading with discretionary to staples and taking that ratio. Positive here. Now, one thing to keep in mind with this green line, we're getting close to this 40 level. That's when we consider it to be extreme. Either the ADX, which is the black line, the green line, or sometimes the red line. Whenever one of those gets above 40, that's when we consider the market to be overextended. In this case, if the green line goes above 40, that would be overextended to the upside. But we're still positive in the meantime. We're also going up with the green line here, getting a little bit closer to 40, but we still are above the moving average and positive in the intermediate term. And we've seen 3 days now that are above average with volume tending to pick up each day. So that's kind of a surprise there after we've been seeing day after day after day of below average volume. So still coming down with the VIX below 20, below the moving averages, both with the line chart and the bar chart. And I wanted to show this. I think it was Stock Traders Almanac reposted this on X, where if you look at July and then going into August, I'm circling that here with the pointer. This is when we see a real pickup in the VIX seasonally. And we've been getting fairly low readings now. We're under 20. That's more positive. Not as low as we were getting down when we get to like 13 or 12. I mean, we have been really dropping, where we tend to see a real drop off with the VIX before we see a spike going up as we get later into the month of July and then into August. And we haven't really seen that yet. This is just a seasonal chart. We'll see if that actually plays through with market action. And we're also below the moving averages with the VIX of the VIX, even though it picked up a little bit on a closing basis. Still, the market is expecting some kind of a big move here, where the skew index is giving us a fairly high reading. It hasn't really topped out. It keeps going up right now. And once we top out and come down, that's when the market is usually seeing, or at least expecting, some kind of a big move. We're thinking that it's probably an upward move here because we're seeing an awful lot of call buying right now. And we did get the latest reading from individual investors. A little bit of an improvement here with individual investors. They're still positive overall. And we ticked up a little bit with this fear gauge, and we're ticking up. It's really hard to see, but it did go up barely here with this fear gauge. So a little bit of fear coming back into the market. We're going up with the daily chart of the equity put call ratio, but we're still going down with the 5-day chart, and we're turning back up with the 10-day chart. So no real conformity there. Still getting a high reading here. And this has been part of the warning sign that I've been seeing here with the volatility risk premium really coming up. We're not seeing that in the VIX. We're not seeing it in the equity put call ratios, but we are seeing it here. And so this is a little bit of a concern. Advanced decline line, though, did tick down a little bit based on price and volume, but still looking healthy overall. We declined with the advanced decline oscillator, but we're still above zero. We declined here with the advanced decline ratio, short and intermediate term charts, but still positive. They're above zero. A contraction of the new highs, a little bit of an expansion of the new lows, but we're trying to turn back positive with the 5-day chart, and we are going up with the 10-day moving average chart. And a little bit of a weakness here with the accumulation distribution, but we came right back down to the moving average with the boom indicator. We're rolling over, but the red line is still almost going up here with the Chaikin money flow. But now we've switched back to negative with the Chaikin oscillator. So there's some selling going on under the surface here. Still looking good with the vortex, though. The green line is above the red line. We're still looking good with all of our different advanced decline lines, even though they all came down. It was more of a negative day across the broader market. But all of these are still above advancing moving averages. We declined a little bit, but still looking positive with those stocks in the S&P above their 20-period moving average. Bit of a decline with the 50-period, 100-period, and the 200-period, but they're all still positive. Short term, we did break above this dashed line here with these pivot points, and so it looks like we're having a little bit of a breakout here. And for 3 days now, we've been above average with volume. But we came down a little here with the 20, 50, and 200 period moving average on the S&P. But on a short-term time frame, we're still looking pretty positive here with the Stochk RSI, Williams percent R, even though it declined a bit, the CCI 14 and the CCI 20. And these are the usual charts that we're seeing good positive short-term momentum. We came down, but we're still above the moving average with the short-term stochastic. We're extreme positive above the moving average with the intermediate short-term. The long short term starting to turn up. It's also extreme positive. And we're coming down a little bit here, but still above the midpoint with the force index. Short-term trend looking pretty good, but you can see the green line and the blue line are really converging with each other right now. Now, that's not really a big deal. Typically, the green line goes faster than the blue line here, but it just means that we've been slowing down. But the takeaway is that both lines are continuing to go up. All right, then we're still at the high end here at the +3 channel with the standard deviations chart. And this is interesting too. We've been declining with the balance of power. It's still positive since it's above zero, but as we've been going up, this has been going down, and that's a bit of a negative divergence that we're seeing here. The short-term trend based on 10 periods still looking good here. The green line's above the orange line, which is above the blue line. That's still well intact there. Still extreme with the CMB composite index. Still positive with the go, no go, darker blue bars there. Still coming up to the highest high value. That's positive. Still getting kind of long here. We started about the beginning of July as far as a time frame here with the Landry light. When we go above this 40 level, that just means maybe this has gone on for too long here. But so far it hasn't really meant anything. And we're still positive in building on this histogram here with the proper order, and it's positive. But we continue to decline with the TTM squeeze. So now we're getting to the point where we're seeing the S&P going up. This has been going down. That's another negative divergence that we're seeing. And still just kind of flatlining, barely positive with the ease of movement. That really hasn't changed now for the past couple of months. But we're still positive with the Arun above zero and going up, meaning there's more buyers than sellers. And we did decline with the S&P McClellan oscillator, but we're still above zero. So when this is above zero, we're going up with the summation index based on price, and we're continuing to go up based on volume. But now we dropped back below zero with the broader market NYSE McClellan oscillator. So again, hard to see here, but we're ticking down a little bit with the summation index based on price. And looks like we're still going up here based on volume. Little bit of a mixed picture. Seeing a bit of a negative turn with the Swinland trading oscillator, declining based on price and volume after it had been positive. And we're just kind of moseying along here, extreme positive with the PMO. We are improving when we break this out based on price and volume. We're a little bit above the moving average based on price. We're not quite above the moving average based on volume. A little bit of a decline, but still above 50 with the PMOs that are rising. The buy signals are still improving. We're right at 50 now. That's the mark between positive and negative, and still getting a fairly high reading here with the PMOs above zero. We're positive with the Elder's Impulse system for the S&P. We're positive with the parabolic SAR. We're declining here with the slope oscillator, but we're still extreme positive, but we're below the moving average. And turning back up, but haven't quite crossed the moving average yet with the MACD. So we're looking more negative with the slope, where the TSI, our other short-term oscillator, that's actually looking more positive, but it's also extreme positive. Turning back up a little bit here with the MACD, but not quite above the moving average. The same thing with the PMO and the PPO. And just kind of flatlining here, slightly below the moving average with the tricks, and flatlining and kind of going down a little bit here with our longer-term oscillator, the KST. So not really seeing a lot of conviction with these charts, but we're still negative with the Copic curve. And we're starting to get into this dark green area here with the Sean trend meter. That's fairly extended to the upside, overextended here. But we're positive with the money flow and the ultimate oscillator. We're positive with unbalanced volume. We're extreme here with the RSI 14, that's intermediate term, and the RSI 9, that's short term. And still looking good, though, with the intermediate term trend. The red line and the blue line continue to go up, and there's still space between them. Where in the short term, the lines are almost on top of each other. Still above all the plotted moving averages here. That's positive. We're still far away from the 20 and 50 period moving averages as measured by the boom indicator. Going back up here, saw a little bit of a tick up with the bullish percent index for the S&P. And we're improving with the NASDAQ, the NYSE bullish percent index, and the NASDAQ 100 bullish percent index ticked up also. So those showing a little bit of internal improvement there. And still looking good, but we do have this R1 pivot point overhead here at 64.68 roughly is where this, are we going to be able to go up there? Is this going to provide some overhead resistance? We've been looking pretty good here. Now, if we can break through this R1 pivot point, that would be much more positive. Okay, still looking good from a trending perspective though. The Heikin Ashi is positive, the Kagi chart is positive, the Renko chart is positive, and the three-line break is positive. Long term, still looking extreme, even though we ticked down slightly with the 150 period moving average study. Still looking positive. It also ticked down a little bit here with the 200 period moving average study. Still positive on all time frames with the major indexes here. Still negative across the board here, or actually back to negative. The bonds had gone positive short term. Now they're negative on all time frames. The dollar continues to be negative, and commodities are positive on all time frames. And we did see energy bounce up a little bit here, tech and communication, and these are growth areas, and these were sectors that ended up being up. So that helped the market, and we saw discretionary getting hit pretty hard. We want that one to do better. So as far as seeing a BPI cross for the tech sector above 70, S&P did set a new all-time high. We had a BPI cross above 70. That was the chart I just showed. NASDAQ and NASDAQ 100, which is not on this alert page here, they're setting new all-time highs. Discretionary had a BPI cross back below 80. Canada sets another new all-time high. And the materials, that was that one breakout chart that I showed here. We had a BPI cross below 70. And so we're seeing green here, not big green. Apple was down, but Microsoft and Nvidia were up. We saw Amazon was up. Tesla got hammered. Now, their earnings report wasn't very well received here. Google was up 1%. Meta was up not very much here. So the Dow just kind of moseying along below this R1 pivot point level, but still positive. And we've gone from positive back to neutral with the diamonds, with the Elder's Impulse system. Still looking good here. This is a really good looking chart here for the NASDAQ. We're above this R1 pivot point. So we've broken above that resistance, and we've been able to stay above that. And we've gone from neutral to positive with the NASDAQ. But this is what we're dealing with here with the NASDAQ 100. We can't seem to close above this R1 resistance point here, this pivot point here. If we can get above that, that would be more positive. Is this going to cause some kind of problems for the NASDAQ 100, which may then feed over into the S&P 500? And we've gone from neutral back to positive with the Qs, with the Elder's Impulse system. Still drifting down here with the momentum of the NASDAQ 100. Still dealing with this long-term trend line. We're a little bit above it right now, but is just about when we hit this line is when things really started to slow down. But it's still a good-looking chart. We're still seeing higher highs and higher lows. Now the small caps, they're just kind of bouncing around here in a range. Still above their 200-day moving average, though, and seeing a little bit more improvement here with the small caps, also with the Russell 2000 small cap index still above the 200-day moving average. Positive back over to neutral with the small caps with the Elder's Impulse system, kind of bounding sideways here. We might be getting to a golden cross with the mid caps, but we've gone from positive back over to neutral with the mid caps when looking at the Elder's Impulse system. The Wilshire ended up being down just a little bit after setting an all-time high. Similar situation here with the total U.S. stock ETF, but this is still looking quite positive. The financial sector was down just a little bit here, and this is what we've been watching, is the ratio between the financial sector and the S&P, still below its 200-day moving average with the ratio. Now, the FANG index did pretty well. Here, these are the really big stocks. It's now setting a new all-time closing high. And Apple was down slightly and still in a downtrend. Amazon is in an uptrend, up 1.73%, but closed well off of its high. Microsoft doing well, up almost 1% and in a pretty solid uptrend. Seeing a golden cross now with Google. It was up over 1%, and we're still above the 50-day moving average with Meta, but it was little changed here. NVIDIA was up 1.73%. You'd think these would be bigger gains here. We're not quite back to an all-time closing high. I could be wrong about that, but just looking at the chart here. But NVIDIA is in an uptrend. And Tesla, it dropped. It was down over 8%, falling below the moving averages. Netflix gained 1/3%, but it's still below its 50-day moving average. And semiconductors did have an up day, but not on this index anyway. The Dow Jones Semiconductor Index not setting an all-time closing high, but we did improve also with the SMH ETF, but they're underperforming the tech sector. We're seeing this ratio going back down. That's what I talk about when I mean the semis are underperforming. They're doing good, and they were up, but it would be more positive if we see this ratio really going up, and it's actually been starting to come back down. That's a little bit of a warning sign to us. When we look at the US versus world stocks, we are improving here with the short-term correlation. We're still drifting off with the longer-term correlation. Oil was up 1.39%, still in the mid 60s here, still in a downtrend with the dollar, and coming in at 2.01% with the latest reading from Truflation. Last week we had CPI, which came in at 2.7%, and we are inching our way back up to this red line. That's the 4.5% level. We want to watch that with the 10-year yield, and we're coming down here with the 10-year based on price, but we're still above the 50-day moving average. Growth to value ratios, a little bit of a tick up back to the moving average with Qs to S&P. Saw some weakness here, dropping below the moving average with discretionary to the S&P. Bounced a little bit off of the moving average when we compare large cap growth to value. So we're above the moving average with the large caps, back above the moving average with the mid caps, increasing here, but still below the moving average with the small caps. And we're still declining with the staples to S&P ratio, and that's positive when this ratio is going down. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. All right, so we're still dealing with earnings season, so it might be more of a case-by-case basis depending on how the market reacts. We're still positive on all time frames, and we continue to be trending. We're going to get durable goods in Friday's session there, and then anything that's announced as far as the trade wars. Now, the chart that I showed earlier, I forget the guy's name, but he's declared the war over. Well, we'll have to see how that ends up going out there. And then there's all these domestic things going on in the US that seem to have everybody's attention right now. And then anything geopolitical in the Middle East, between Russia, Ukraine, anything there could always escalate and have an impact on the market. So we just have durable goods for Friday's session. And last time we had this, they're actually anticipating that it's going to be down, where last time we had a positive reading here. Seasonality, we are positive for July 25th with both the Dow and S&P. The NASDAQ is neutral to positive. It tends to underperform on this day. And we have the last day here of the week after options expiration for the week. Now we're looking at an up week unless we have a pretty significant down day on Friday. But we do tend to be down more than up in the week after options expiration going back to 1980. But when you look at just post-election years, though, a little bit of a drift off here for the next few trading sessions before we see a little bit of a pop going into the end of the month. And this is what I've been bringing up over and over here. The second half of July tends to underperform the first half of July, but the second half of July is still positive. All right, this also showing with the Carson chart, a little bit of a drift off before we see a pop going into the month, the end of the month. Okay, and we're getting a mixed picture with our smart money indicators. The boom indicator is not really strong right now, but we're still positive with accumulation distribution. The Chaikin money flow is declining, but the red line's still going up, where we're flat out negative with the Chaikin oscillator. And then the NYSE McClellan oscillator, that's a broad market measure here, and summation index are now back to negative. And we're still getting a mixed picture, a little bit of an improvement there with the S&P oscillators, but the Copic curve is negative. The Swindler trading oscillator, now we're declining again based on price and volume, and the momentum for the NASDAQ 100 continues to be negative. The long-term special K chart is negative, and we're still working off of a long-term Zohorchak method sell signal. Positive side, though, we're still seeing our growth to value and discretionary to staples ratios. They remain positive. The S&P McClellan oscillator, even though it declined, it's still above zero, so that's helping the summation index to continue to go up. Parabolic SAR is positive, as is the bullish percent index, as we're starting to get extreme with the S&P. But we saw a nice little bit of a turn up here internally, and that could be encouraging that way. The ease of movement, money flow, and ultimate oscillator are all positive, as is the vortex. The financial sector continues to be positive, but it's underperforming the S&P 500. Here are the pivot points for Friday's session, which are available on the YouTube community tab. Okay, conclusion, no changes overall. We're still positive on all time frames, and we are trending. Thank you. Have a really good day on Friday, and I will talk to you in the next video.